Is it? Disposals. Explain how the disposal is how if you what happens. You will have the group parent company, you have subsidiary company, you have an associate. Is it right? If they want to sell it off, is it right? Only the parent can do that. Okay. If you want to sell it off, how we have to treat disposal in the consolidated financial statements, and how we are going to disposal of the entire shareholding of the subsidiary. If you want to remove, how what is the treatment, how we have to account it in the financial statements. Is it right? You have the disposals, we are talking about the group accounts, and we are taking into consideration now we focus more on the parent company rather than the subsidiary company. Fine. A few slides talks about the format. Is it right? When a shareholding in a subsidiary is disposed of, it must be reflected in the parent's company individual financial statements. Is that means the moment you are talking about the disposals, subsidiary financial statements is not that much important. Which financial statements are important? We are talking in terms of parent company's financial statements. What the parent company financial statements, how it has to be reflected? Definitely, it is any gain to the parent company, gain or loss on disposals. Is it right? What is the first step? You have to take the sale proceeds, carrying amount of the carrying amount. Is it right? Now you know the carrying amount. Carrying amount is nothing but the amount which is going to be displayed in the balance sheet as such. And definitely, whatever the difference will be, the gain or loss. The gain should be is an exceptional item. It is one of items. It is the it is not an item which is going to be repeated. It is one off item. Is it once in a time? Is it right? Must be disclosed separately. We should not mix it up. Is it right? In the statement of profit and loss account after profits from operation. Is there any tax on the gain is going to be calculated as per the financial statements of the parent company? What will happen? Definitely there will be any capital gain tax will be there. Any disposal gain tax on the gain of the disposal of the whatever the profits you get, on that profits you have to pay the tax if it is needed. Is it? Disposal, if you want to sell off whole subsidiary, is it right? The impact of disposals on the financial statements will be 100% of subsidiary results consolidated up to date on the disposal. Means what if it is subsidiary is sold off 100%, is that there is an option. You can reduce the subsidiary by percentage terms, or you can reduce the subsidiary by 100% of its stake. Okay, then your subsidiary results consolidated up to the date of till the date of disposal. You have to consolidate it. Definitely, you have to take the disposal value minus carrying amount. You will get profits or you will get loss. Now, what happens usually whenever we are going to say, it is a common understanding, okay? At the year end, no shares are held by the parent. There is no share, we are disposing of. Therefore, the disposed subsidiary is not included. As simple as that. Is it? Gains on loans and disposals to be included within retained earnings. Definitely, there is a profit or losses. We don't have any other option. We have to show it in the retained earnings. Is that sale disposal? What are the net assets at the date of disposal? If there is any net goodwill, definitely we have to add NCI, non-controlling interest, we have to deduct, and subsequently we will get gain or loss. Is that? See, this one you have to be. Is it? This one we have to be little bit careful. Is it? This one we have to be little. What is most important is you have to take the sale proceeds. You have to add net assets of disposal. Is that anything is goodwill, and we have to deduct what? Non-current assets. Non-controlling interest at the date of disposal. The gain, see, as simple as that. The gain will be included in the profit, gain or loss. Okay, any tax we have to pay a tax on the gain. And what they say that we have done discontinued operations. Is it right? Cash generated units. We have an idea about cash generated units. Is it right? Is it? That is the same principle we have to apply here. Is it? Carrying amount of the goodwill, how much consideration transfer. These are structures. Is it right? The moment I am going to do the calculations, I will give a reference to this. Okay. With respect to carrying amount, the net assets also, we have to take what are the net assets brought forward and what is the profit and loss. And if there is any dividends paid, we have to deduct those dividends. Is it right? What we have done two things. Is that as per net assets or as per the fair value of the assets of the subsidiary. If using the fair value method, you will either be given a fair value at disposal. See, this is point to be noted. Okay, fair value at the disposal, or you will be calculated as follows. Is it how the fair value will be calculated? The rule says that NCI at acquisition. Is it right? We have done NCI at acquisition, NCI at the, they will give you at the additional information. Is it? What is the non-controlling interest percent of subsidiary retail post-acquisition profits at the reporting date, at the acquisition date, the difference between, first at acquisition date, then at the reporting date, whatever the difference between the acquisition date and the reporting date is the post-acquisition profits. Any impairment is there, we have to reduce it. Is that? We have, otherwise, if they gave you the things with respect to net assets methods, NCI at acquisition and NCI of retained profits, what is the, you have to add the post-acquisition profits of the NCI at the time of disposal. Is it right? Now, fine. This much is these are the format, these are the tables which you should work it out over a period of time. Fine. Now we will do a small questions. It will make you understanding about how the things will work. What they are saying, is it? What they are saying is Rock investment, Rock acquired how much? Rock acquired 70%. Is it right? Rock acquired 70% in dog for how much? 2 years ago. Is it right? 2 years ago. How much is that? This is 70% and this is 20%. Is it right? 2 years ago. It is a group policy to measure NCI interest, NCI non-controlling interest at the fair value. Okay, fine. The fair value of non-controlling interest at the date of acquisition is how much? 100. Is it right? And the fair value of net assets are how much? 1,900. Is it right? 1,900. The goodwill has not been impaired. Good, fine. Rock disposed of all the shares for how much? They have disposed of the shares for how much? 3,000. Is it right? They dispose of the shares. The fair value of the net assets at the disposal is how much? 2,400. Fine? 2,400. What they are asking us, Calculate the profit and loss on disposal that we recorded. Is it an individual statement of profit and loss account and ROC's consolidated statement of profit and loss? Fine. Okay. Okay. Now, first see how the process will work. Okay, how the process will work. I'm just giving you. Is it you have to take sale proceeds? Is it right? You have to take sale proceeds. How much is the sale proceeds? Sale proceeds are 3,000. Okay, sale proceeds are. Okay. What is the carrying amount of the investment? Is it carrying amount of the investment? They have mentioned anywhere carrying amount of investment. The ROC acquired 70% in Dow for 2000 2 years ago. Is it right? 2000 for 2 years ago. That is the carrying amount, and it is group policy to measure non-controlling interest. The fair value of NCI is 800 and the fair value of net assets are 1900. The goodwill has not been impaired. They have disposed of 300 shares. The fair value of net assets at the date of disposal is how much? The fair value at the date of disposal is fine. Okay. Now, is it right? Now, see, we will not go like this. Is it? We will first we will do the workings. Okay. First we will work out the workings, and then we have to do this. That's as simple as that. But is it right? First, what we'll do? Working note 1. Working note 1. Working note 1 talks about what? Working note talks about the goodwill. Is it goodwill? Now, how we have to calculate goodwill? First, fair value of P's investment. Is it? They have given is a fair value of P investment required per parent company. Is it right? It is measured that NCI they have given, NCI of Dow they have given, fair value of they given, the goodwill is not impaired, they have disposed of sale proceeds 3000, the fair value of sales means the fair value is how much? The fair value of yes, is right? Next, for one fair value of ROC's company investments. Is it right? Fair value of ROC investment. How much fair value? 2000. Is it the investment? They have not mentioned anything. This is what it says. Is it right? 2000. Fine. 2000. Next, you have what you have to do? You have to add. Is it right? Add fair value of subsidiary. Is that they should have used dog? Is that fine? No problem. Is that fair value of the NCI? I will put like this. Is it fair value of the NCI? Is it right? Fair value of the NCI. How much is the fair value of the NCI? Fair value of the NCI is 800. Is that fair value of the NCI is fair? This is the fair value. This is the fair value is nothing but the market value. Okay, fair value is nothing but the what at the time of disposal. Now from this fair value, we have to take the we have to deduct the NCI. Is it right? Net fair value of net assets. Is it right? Fair value of net assets Where is the fair value of net assets? Here they have mentioned, is right? They have mentioned what? They have said that fair value of subsidiary net assets are how much? Net assets are 1,900. Is it right? 1,900 minus fair value of net assets of NCI. Is it right? Non-controlling interest. How much? 1,900. Understand all? For fair value of investments, fair value of the NCI. Okay. Now what is the fair value of the net assets? Is it right? If you deduct this, how much you will get? 2,800 minus 1,900. It comes to how much? It comes to 8 minus 9, 7. Is it right? 2,800 minus 1,900. 2,800 minus 1,900. Is it right? How much you will get? You will get 900. This is nothing but goodwill at the time of disposal. Is that goodwill at the time of disposal? How much goodwill at the time of disposal? Goodwill at the time of disposal is 900. Fine. Goodwill at the time of disposal is how much? 900. This is the goodwill. See, goodwill, how we have calculated? Fair value of the investments of the parent company, fair value of the investments of the subsidiary company minus fair value of the net assets of the subsidiary company. Fine. Next. Second one, what we have to do? We have to working note 2. We have to take what is the NCI, is it? What is the value of NCI? That's very important, is it right? Is it right? NCI, non-controlling interest at disposal date. Is that we have to take what is the thing? When we are talking about the things, they have taken NCI at the date of acquisition. Is it right? NCI at the date of acquisition is how much? Fair value of NCI at the date of acquisition is how much? 800. Is it right? Fair value of NCI. Is it right? Fair value of NCI at acquisition date. Is it right? At acquisition date is how much? It is 800. Okay. Next. You have the see what we used to do, fair value of the acquisition date, then you add post acquisition profits. Where is the post acquisition profits? They have mentioned the value of net assets is 2,400. Is that subsidy value of net assets disposal is 2,400. Fine. Is it right? Yes. The fair, how much is there? See that the goodwill has they have disposed of all assets, shares, how much? 3,000. Is it right? They have disposed of all the assets at 3,000. The fair value of net assets is how much? 2,400. Fine. The fair value of net assets at the date of disposal is how much? 2,400. The fair value of at the time of disposal is how much? At the time of disposal is 2,400. What is the fair value of the net assets? The fair value of net assets, see, because of this now, we are getting confusion. That's all. Nothing is there. Is it right? So okay, fine. Okay, this is 800. Put it as okay, fine. Now 1 minute. How you have to put? Just I'm thinking. Is it that you put? It is no. Fine. Fair value, is it right? Fair value of, I try to avoid dogs, that's all. That is the problem, okay? Fair value of dog, net assets at disposal. At disposal, how much? It is 2,400, okay? It is 2,400. Fine. Next. Fair value, fair minus fair value of dogs net assets at date of at fair value of dogs net asset. The fair value of non-controlling interest is this much, and the fair value of dog net assets at acquisition date. How much is the fair value? 1,900. See, at the time of disposal, what is the value of net assets? 2,400. At the time of acquisition, what is the value of net assets? 900. Is it right? If you take the difference will be how much? Difference will be 500. Is that difference will be how much? Difference will be 500. Fine. Is it? Difference will be how much? Difference will be 500. Is it? Difference will be 500. Is it? Share of, this is called as, we have to mention here. Is it right? This is called as post acquisition profits. The share of NCI in post acquisition profits. How much is there? 500 into 30%. Is it right? How much is there? It is 70% is 70% is that 70% is the parent company, 30% is how much? 30% is the subsidiary company. How much is there? It comes to how much? 150. Total is how much? Total is 950. Is it? Total is how much? 950. That much we have to do. Okay. See, what this is working note 1. This is working note 2. Okay. Okay. 1 minute. This is okay. This is working note 1. This is working note 2. Okay. What they are asking us, rock individual statement of profit and loss. Is it right? Rock individual statement of profit and loss. How much they have sold, subsidiary, disposed of all the assets. Is it right? See, it is there here. Is it right? It is there here. How much they have disposed of all the assets. Is it? Rock disposed of all the shares by how much? 3,000. How much they have purchased? They purchased it for 2,000. Fine. They have purchased it for 2,000. I will write here. Is it right? I will write here point number A. Is it right? Point number A. Is it right? Point number A. Gain in rocks individual statement of profit or loss. Is it right? Profit or loss. Is it right? This is point number A. Is it right? Next, how much is the sale proceeds? Sale proceeds are 3,000. Okay. Carrying amount will be how much? Carrying amount is how much? Carrying amount is 2,000. Is it right? 2,000. What is the profit? Gain. Is it right? Gain on disposal. Gain on disposal is 1,000. Fine. This is point number 1. Okay. This is point number 1. Next. Point number 2. What they are asking us? Raw consolidated profit and loss. Is it right? Raw consolidated. This is individual. Raw consolidated statement of profit or loss. Is it right? Profit or loss. Fine. No. Sale proceeds are how much? Sale proceeds are same. Is it right? Sale proceeds are how much? Sale proceeds are 3,000. Fine. Now, now you have to how much they have disposal they got disposal how much? Net assets 2,400. Is it right? How much is the goodwill? 900. Is it right? What is it? Is it? How much is the goodwill? 900. Fine. $2,400 and 900. It comes to how much? 2,400 and 900. 3,300. Is it right? Okay. Now, from here, what we have to do? Is it less? See, what sale proceeds are 3,000. Is it right? From here, we have to deduct the what is the carrying amount? Is it right? What is the carrying amount of subsidiary? Is it right? Carrying amount of subsidiary. Now, we have to focus on carrying amount of subsidiary. Is it right? What is the when we say what is the net assets value of subsidiary? Net fair value of net assets are how much? Fair value of net assets are 2,400. Is it right? Fair value of net assets of subsidiary only. How much? 2,400. We have to focus only on subsidiary. Okay. Now, goodwill is there. Is it right? How much you got it? Goodwill. Goodwill is how much? 900. Is it right? Goodwill also we have to remove it. Is it right? Then only we say what is the profit or what is the loss. Is it right? Then only goodwill at disposal. Is it right? Goodwill at disposal is how much? 900. Fine. Goodwill at how much? 900. It comes to how much? 3,300. Okay. It comes to 3,000. See, this is the value. Okay. This is the value of net assets. This is the value of net assets and this is the value of the goodwill. Okay. Now from this we have to remove the 30%. Is it right? We have to remove the 30% of the NCI. Is it less from here? Okay, from here only. We should not go further. From here only, NCI at disposal. Is it NCI at disposal? Which one? This is working note number 2. This is working note number 1. Is it? This is working note number 1. This is see what we are doing. We got the sale proceeds. Is it? From the sale proceeds, what we have to deduct? We have to remove all the whatever the amounts belongs to the non-current NCI, non-controlling interest. What is the fair value of non-controlling interest of the net assets? 2,400. Goodwill comes from the purchase and sale of the subsidiary only. Is it right? Goodwill is not coming from any other source. Is it right? Because why we are removing goodwill is it comes from the transaction that has been done with the subsidiary. Now that is the reason in this amount, what is the non-controlling interest at disposal? Non-controlling interest at disposal is how much? 950. Working note 5. Okay, sorry, working note 4. Now how much you will get? 3,300 minus 950. It comes to 0, 5, 12 minus 9. Is it right? 12 minus 9, it comes to 3, it comes to 2,000. Is it clear? Again, see one by one. Okay, first time we are doing this. Just I will explain you 1 second. Okay, how much is, see, this is the group structure. Okay, go by the same way how we have done. Is it right? This is the group structure. Group structure is this much. Fine, good. First we have to calculate the gain or loss is very clear. Is it right? Sale proceeds is 3,000, carrying amount is 2,000, gain on disposal is 1,000. Okay, here we have very straightforward answer. There is no concept there attached. Now what is there is how much is the goodwill? Is it right? How much fair value of investments? Fair value of investments is how much? They have mentioned where? Fair value of parent company investments. Okay, fair value of what? Fair value of parent company investment. Is it? It is parent company. Okay, fair value of parent company investment is how much? 2,000. We don't have anything. Is it right? We have that much information only related to the parent company. Okay, 2 years ago. Now fair value of the subsidiary is how much? Fair value of the subsidiary, fair value of non-controlling interest in dog at the date of acquisition. Is it right? Fair value of NC, fair value of, I will put like this. Is it? Fair value of NCI at the date of acquisition. Is it right? Fair value of NCI at the date of acquisition. This is 0.1. Okay. This is 0.1. I'm just making it a is it? This is 0.1. Is it right? This is 0.2. Okay. This is 0.2. Okay. Fair value of NCI, fair value of net assets is how much? Fair value of dog net assets means, yes, definitely. Is it that this is the fair value of the investment minus the fair value of net assets. Got my point? Fair value of investments minus fair value of net assets. Definitely, what will happen? We'll get the goodwill. This goodwill we have to remove, because this happens because of the when we add it, when we are going to acquire it, when it is going to be disposed of, we will deduct this goodwill. Fine. Now, what is the NCI? What is the share? They have the fair value of NCI at the date of acquisition is how much? 800. Is it right? NCI at acquisition. Only the non-controlling interest. Now, non-controlling interest, definitely in this, how much is the profits? Okay, that is very important. How much is the post-acquisition profits? We will add post-acquisition profits. Remember this, we are not changing the structure. We will take the fair value of NCI plus post-acquisition profits of NCI. The value of NCI assets are 2,400 when they are going to sell it off. When they have purchased it, the value of the assets of 1,900. Their assets value has been increased. When the assets value has been increased after purchases, it means it is a post-acquisition profit. Post-acquisition profits is 500. On this 500, what is the share of the NCI? The share of the NCI is 30%. That 30% we have taken it and we have added. How much NCI is? NCI is 950. Okay? NCI is 950. Now, what we have to do? We have taken the sale proceeds of 300. From this 3,000, we have to remove all the things which are related to NCI. What is the fair value of NCI of net assets? 2,400 at the time of disposal. Is it right? This is at the time of disposal. How much is there? 2,400. How much is the goodwill we have calculated? Goodwill we have calculated 950. Is it right? What is the cost of the NCI disposal? Goodwill is 900. Cost of disposal is 950. It comes from this is the profit and profit that belongs to what? Profit of rock at the time of disposal. I can understand. Is it right? It is first problem. Okay. The first problem, as usual, the first problem will take time for us to understand. Is it right? But we are not changing the structure. Is it right? We follow the NCI rule as such. NCI is what? NCI is the date of acquisition plus post-acquisition profits. Fine. That's the way we are doing. Again, we are talking about the goodwill also. We are making it we are making the goodwill as whatever the value of investments minus the net value of net assets. Is it? Value of investments of parent company, fair value of the investments of the subsidiary company minus the fair value of the net assets. Is it? Fair value of investments minus fair value of net assets. It will have goodwill at disposal. We are getting the thing. That disposal we will reduce. Is it clear? Just give me some time. The moment we'll go to the next one, Inshallah, it will be more clear for us. Just give me, okay? Next question, clarity will increase. Is it right? Next question, the clarity will increase. Now, is it right? Now, just take this one also. What it says, the same concept, is it right? The same concept, we are repeating that same steps, is it right? The statement of profit and loss account, is it right? The statement of profit and loss account for the year ended as follows. There is two different companies, Kathmandu and Nepal. Is it right? They gave you the revenue, cost, all those things. Is it right? Fine. What they said, is it right? What they have mentioned is, what they have mentioned is, on January 1st, 2005, Kathmandu acquired how much? Group structure. Is it right? Group structure. Is it right? How much is the Kathmandu? Kathmandu is how much? They got 70%. Is it right? How much they have talked? They are talking Nepal is how much? 30%. Is it right? When they have done, this is on 1/1/2005. Okay? 1/1/2005. When the fair value of net assets are how much? The fair value is how much? 110. Nepal has equity of 50,000 at that time. At that date, the fair value of NCI, is it? The fair value, this is the fair value of what? The fair value of net assets. Is it right? The fair value. Now, the fair value of NCI is how much? The fair value of NCI is, the fair value of non-controlling interest is how much? The fair value of non-controlling interest is, see, 110,000 is the fair value of total net assets. Okay? Total. And what is the fair value of the subsidiary? The fair value of the subsidiary is 40,000. Fine. It is the group policy to measure NCI at the fair value. Fine. Okay. Now, Nepal paid how much? 10,000 as dividends. They have the retained earnings of 80,000 and goodwill has not been impaired. Prepare the group profit and loss account for the year ended for the parent company on the basis that the parent company has sold the subsidiary company for how much? 200,000. This disposal is not yet recognized in the way Kathmandu statement of profit and loss account. Okay? They have given the NCI, fair value of net assets. They are given the fair value of the NCI. They gave us the dividends and retained earnings. Okay? Fine? This is the group structure. This is the group structure. This is 1. Okay? Always make it a point. Working note 1. Okay? Group structure will be always working wherever you are doing. Is it right? Next. Working note 2. Is it right? Working note 2. Okay, working note 2. what we have to do? Net assets. This is what we are doing, is it right? Net assets of the subsidiary, is it right? Net assets of the subsidiary. Is it? Net assets of the subsidiary. They have given any assets for us? No. See, there are two different ways. Is it calculating net assets? There is a equity approach, there is a equity and liabilities approach, there is a assets approach. Is it right? Here, when you are talking about the things, they have not mentioned the assets. Is it right? See, listen. There are two methods of calculating the net assets. The first method is assets approach. The second method is the equity and liabilities approach. Is it right? Take all the equity minus deduct the liabilities. Fine. Take all the equities, any liabilities are there, we have to take. What is the equities there? They have the share capital. How much is the share capital? 500. Okay. How much is the share capital? 50,000. Sorry. Share capital is how much? 50,000. Retained earnings is there. How much is the retained earnings? Retained earnings are how much? Retained earnings are 80,000. Fine. Retained earnings are how much? 80,000. Next. Is it right? Retained earnings are 80,000. Next. What is the, when they have purchased this company on, they have purchased on 1st January 2005. Is it right? And when they have disposed it off, see the things. They have prepared the group accounts of statement of profit and loss account for 31st December 2009 on the basis that the parent company sold the subsidiary company. When they have sold on 1st July. Is it right? This has been sold. Is it right? Means they have sold after 6 months. Is it right? They have sold when? They have sold on 1st July 2009. Fine. We are preparing for 31st December 2009. Okay. Now, when they have sold for 31st July 2009, these are the profits. Is it right? These profits should be, what you have to do? These profits has to be taken for how many months? For 6 months only. Is it right? For 6 months only. How much will get 6 months profit? 18,000. Is it right? How much will get profit? 6 months? 18,000. Because they have sold it when? They have sold it on 1st July. Okay? They have sold it on 1st July. Is it right? Now, net assets as per equity method. Equity and liabilities method. Fine. Now, when you do the things, what happens? Take the share capital. How much is the share capital? Share capital is 50,000. Is it right? Next, you will have retained earnings of 80,000. Is it right? How much is the retained earnings? Retained earnings are how much? 80,000. Is it right? Add current year profits. Is it right? Current year profits. How much is the current year profits? For 6 months only. Okay? For 6 months only. Is that 36,000 into 6 by 12? It comes to how much? 18,000. Is it right? 18,000. Now, they have paid dividends. See the things. They have paid dividends before disposal. Is it right? they have paid dividends before disposal. These dividends are what? Before disposal. Is it right? Before disposal. How much? 31st March. When they have sold? 1st July. Okay, they have sold on 1st July. They paid dividends of how much? On 31st March. Is it right? They paid on 31st March. Less. Is it right? Less dividends. Is it right? Before disposal. How much? 10,000. How much is the total? 50 plus 80, 130, 148. It comes to how much? 138. Is it right? This is the NCI at. This is the net assets of NCI. Are you clear about this? Is it? This is the net assets. See, we have taken the share capital, we have taken the retained earnings, we have taken the current year profits for 6 months because it has been sold on 1st July. Okay, that is the reason we have taken 6 months. And we have reduced the dividends because it has been paid before the sell-off. Okay, before the sell-off. The second point, is it right? The point number 3 is we are talking in terms of what? We are talking in terms of goodwill. Yeah, profit in terms of goodwill. How much is the goodwill? How much you have paid to purchase that one? They have paid how much? 100,000. See the thing. On January 1st, 2005, Kathmandu acquired 70% of the shares for how much? 100,000. Is it right? How much they have provided? Purchase consideration. Is it right? Purchase consideration. How much purchase consideration is? 100,000. Fine. Now, what we have to do? We have to take into consideration fair value of NCI. Is it right? Fair value of NCI at the date of acquisition. Is it right? Fair value of NCI at the date of acquisition. They have mentioned here somewhere down the line. How much is the fair value of NCI at the date of acquisition? 40,000. Okay. How much we have to take? 40,000. Okay. 40,000. Next. How much we'll get? 140 minus. Is it right? Minus. What we have to do? We have to take minus fair value of net assets of NCI. Is it right? Fair value of net assets of NCI. How much is the fair value of net assets of NCI? 110,000. Is it right? This 30,000 is the good. The same process, we are not changing. Purchase consideration is 100,000. Fair value of NCI is 40,000 minus fair value of net assets. How much? 110. What's happening? It is 30,000 is the good. Are you okay? Is it clear? Fine. Okay. Next. Is it? Next. Point number 4. Okay. Point number 4. What we are doing? What is the NCI? Non-controlling interest. Same steps we are doing. Okay. Here what happening? Non-controlling at interest on the disposable date. Okay. That is the only difference we are going to have. Is it right? There is the only difference. What happens? Fair value of NCI. Is that fair value of NCI? Is that at the time of acquisition? Is it right? Fair value of NCI at acquisition is how much? Fair value of NCI at the day acquisition is 40,000. Is it right? 40,000. Now add. What we have to add? We have to add. Is it? We have to add what? We have to add post acquisition profits. Is it? Share of post acquisition profits. Fine. Post acquisition profits share. Okay. How much is the post acquisition profits? How much is the post acquisition profits? What is the post acquisition profits? Post acquisition profits is nothing but, is it right? Fair value of NCI, fair value of fair value of NCI net assets. Is it right? At acquisition. Is it right? At acquisition. At acquisition. Is it right? Working note number 2. Is it? How much is there? 138. Is that? This we have done. Is it right? This is the fair value of NCI at the date of acquisition. Is that how much? 138. Now from this, how much they are paying? They are paying how much? One. This is fair value of NCI at the time of disposal. Is it right? At the time of disposal. Is it right? No. Fine. Fair value of the amount. Now, one small change. Okay. Fair value of NCI at disposal. Is it right? Disposal is how much? 138. Okay. Now, what is there? They have said fair value of net assets at the time of acquisition is how much? 110. Okay. Fair less, is it? Less fair value of net assets of NCI at the time of acquisition. At the time of acquisition, how much? At the time of acquisition is 110. Okay, 110. Now, how much is that? 28,000. This is post acquisition profits. Is that? This is post acquisition profits. Fine. We are not going to take anything here. Share, we are taking only the share of post acquisition profits. Is that? We are taking only the share of post acquisition profits. How much post acquisition profits? What is the share? 30%. At the rate of how much? 30%. Is it 28,000 into 0.30? It comes to how much? 28,000 into zero point 0.3. It comes to how much? 8,400. 48,400. Okay, 48,000. Previous also we have done the same thing, is it? 48,400. This is what? This is the NCI at disposal. Is it? At disposal date. What is the NCI at disposal date? Fair value of net NCI at the time of acquisition plus share of profits at the rate of 30%. Fine? No. Okay? Good. Fine? Next. Okay? Working note number 5. Okay, working note number 5. Profit on disposal. Profit on disposal. Fine. Profit on disposal. How much we have sold? We have sold it for how much? Sale proceeds are how much? Sale proceeds, is it right? Sale proceeds. Sale proceeds. I am writing the date also. 1/7/2000, 2009. Okay. How much they have sold? They have sold it for 200,000. Fine. They have sold it for how much? 200,000. Okay. Next. Is it right? Next. Fine. Put this, see, this is little bit, this is put this as A. Okay. Put this as A. Fine. Okay. Put this as A. Okay. Next. That's little bit, is it? Next. What we have to do? We have to write the carrying amount. Is it right? Carrying amount. Is it right? Carrying amount. Carrying amount of subsidiary. Okay? Carrying amount of subsidiary. Is it? Carrying. Only we are taking the subsidiary. Okay? Only we are taking the subsidiary. Net assets. Is it right? Net assets at disposal. Is it right? Net assets at disposal. How much we have calculated? Net assets at disposal, working 1. How much is the net assets at disposal? 138. Is that fair value of NCI at the time of disposal? How much? 38. Next. Goodwill is how much? Goodwill at working note 2. Is it right? Goodwill is how much? 30,000. Fine. How much we'll get? 168,000. Okay. 168,000. Now, NCI, is it right? NCI at the date of disposal. Is it right? NCI at the date of disposal. How much is there? This is working note 4. Is it right? This is working note 4. How much? 48,000. 48,400. How much you'll get? 600, 9, 541, 119. 119,600. Okay. This is B. Okay. This is B. B. What is the B? B. What is the B? I will write again. This is the carrying amount. Is it right? Carrying amount of subsidiary. Is it? Now little bit clarity has been increased. Otherwise now we are putting the things and we are not getting the right message. Okay, we are not getting the right message. Now, is it right? Now, profit on disposal. Is it right? Profit on disposal. Is it right? Profit on disposal is nothing but, is it right? Sale proceeds. Is it right? Sale proceeds. Point A. How much? 200,000 minus carrying amount. Is it right? Carrying amount. Point B. Okay. Now it's clear. Is it right? Comparatively, that we will understand. How much is there? 400. 0. 9 minus 1. 8,400. Is it right? 8,400. Okay. Fine. Now, yeah, little bit more clarity is there. You can see the difference. Is it right? We have a very clear message. Sale proceeds is 200,000. Carrying amount is 119. Sales minus carrying amount is the profit on disposal. Fine. It is the profit on disposal. Is it right? Now, we have to take the 36,000. Is it right? 36,000. How much is there? 18,000. Is it right? 18,000. 18,000 we have to divide 70% and 30%. Is it right? 70% and 30% we have to divide. Is it right? Working note 6. Is it working note 6? Is it working note 6? What is the working note 6? Profit. Profit attributable to NCI. They have sold. Is that means the profit attributable to 36,000. They have sold on 1st July. Is it right? Till 1st July only we have to take. We are not going to take the rest of part. Is it right? Profits of subsidiary. Is it right? How much is the profits of subsidiary? 36,000. Is it right? 36,000. 36,000 into 6 by 12. Is it right? How much is there? It comes to 18,000. Fine. Next. NCI profits. Is it non-controlling interest profits? Is it right? Non-controlling interest profit. At the rate of how much? 30%. It comes to how much? 18,000 into 0.30, 5,400. Is it right? 5,400. Is it? This much we have to make sure. Fine. Now, what we have learned in lecture 19. Okay, lecture 19, profit and loss account. Is it right? Consolidated profit and loss account. What we have done there, we have to follow the same structure. Is it right? Next, now what we have to do? We have to make a consolidated profit and loss account, of Kathmandu as for the year ending. Is it for the year ending 31st December 2007? Is it 31st December 2007? Okay. Now, slowly and steadily we have to do. Revenue is how much? 553. Okay. Revenue is here. What we have to do? We have to take 6 by 12. Okay. We have to take 6 by 12. Fine. Here also we have to take 6 by 12 for 6 months. Okay. Here we have to take 6 by 12 for 6 months. Okay. Operating profit 8,000. Is it right? 8,000. And investment income is how much? 8,000. Fine, we'll take that. Investment income is how much? Dividends are there 10,000. Is it right? Dividends are there 10,000. Fine, we'll see that. Is it right? And how much is the taxation? Taxation is also how much? Taxation is 14,000. Is that? Taxation also 6 by 12. Everything 6 by 12. Okay? Everything is 6 by 12 as such. Because it is for 6 months. Okay? It is mid-year. It is a mid-year disposal. Is it right? This is a mid-year disposal. Fine? Now, is it revenue? Is it revenue? Kathmandu is how much? Kathmandu is how much? Kathmandu is 553. Is it right? Kathmandu is how much? 5. Nepal is how much? Nepal. Here it is is it right? 450 into 6 by 12. Is it right? 450 into 6 by 12. It comes to how much? It comes to 225. Please check. I am doing it without calculation. Is it right? 225. 0, 0, 0, 8, 8, 7, 7, 778. Is it right? 778 less cost of sales. Is it right? Less cost of sales. Kathmandu is how much? Kathmandu is 450,000. Is it right? What is the? They have operating cost. Okay, they have operating cost. I'm trying my best to support the workings. Okay, so that we should not have anything. Or is it less operating cost? Is it right? Operating cost. Operating cost. Kathmandu is how much? Kathmandu is it? Kathmandu is how much? Operating cost 450. Is it right? 450. Nepal is how much? Is it right? Just 1 minute.
$45,000 multiplied by 6 by 12. 22,500.
Where 450,000, na?
450 or 45,000?
How much it is displayed there? Check.
450.
450 or 450, 450 or 45?
50.
No. Ask me that That makes things easy. Is it right?
Because you wrote 45,000 here.
Where it is there? Oh, sorry. Thank you so much. Is it? Thank you so much. It's my mistake. 450. Is it okay now?
Yes.
Is it right? Fine. Thanks so much. It happens. 450,000. Okay. Next. Nepal is how much? 400,000 into 6 by 12. 400 into 6 by 12. How much? 200,000. Is it right? Total how much? Total 650,000. Is it right? Total 650,000. How much you will get? 872. Is it right? 128,000. Is it right? 128,000. Operating profit. Is it right? Operating profit. Fine. Next. Investment income. How much investment income? 8,000. Is it right? This is belongs to how? Kathmandu. Is it right? It belongs to how much? Kathmandu. Now, investment income Kathmandu. Okay. How much? It is 8,000. Fine. How much is the investment income from the subsidiary? Is it right? You have to reduce. Is it right? You should not see. You are disposing of. Is it right? You are disposing of the. Is it right? Means you should not consider that. Is it right? Is it right? Dividend income. Dividend income. How much dividend income from Nepal, from subsidiary? Is it right? Dividend income from Nepal. How much they are paying dividends? 10,000. And what is the share of Kathmandu? 7,000. Is it right? What is the share of Kathmandu? 7. Means when you are disposing of the subsidiary, again we should not show the any amount related to subsidiary. Okay? We should not take any amount related to subsidiary. How much is there? 1,000. Understand my point? Little bit cautious about this. Is it right? Little bit cautious about this. Is that? I'm just putting that. See how much you got income? You got income of 8,000 investment income. From this 8,000, since we are disposing of the subsidiary, we should not include, okay, more appropriate, we should not include the dividend income of the disposable subsidiary in the financial statements, which we are going to show in the 31st of December. Fine? 31st of December. Is it? How much is there? Next. Fine? How much we got profit on disposal? Is that we got some profit on disposal? How much is the profit on disposal? Which one? We have done one working. How much is there? Profit on disposal. We got how much? 80,000, something like that. 80,400. Which working note? Working note 5. Is it? Working note 5. Profit on disposal is how much? 80,400. Is it right? 80,400. On this also we have to pay tax. Is it right? On this also we have to pay tax. That's why we have to add before we pay tax. Okay. How much is there? 004,991 209. Just check. This is profit before tax. Is it right? Profit before tax. Next. Is it? Next. Less taxation. Is it right? Less taxation. Taxation. Kathmandu is how much taxation? Kathmandu is 40,000. Nepal is how much? Nepal is 14,000. 14,000 into 6 by 12 because 6 months. Okay, because it is 6 months, 7,000. Okay, it is 6 months, 7,000. How much is the taxation? Taxation is how much? Taxation is how much? 47,000. Okay, taxation is how much? What is the balance you will get? 162. Is it right? 162. This is profit for the year. Is it right? Profit for the year. Fine. Now, is it? Share or see what we have to do. Just remember how we have done. Is it right? Just remember what we have done is lecture 19. Is it right? This is profit for the year. Is it right? This is profit for the year. How much? 162,400. Is it? NCI profit. How much is the NCI profit? We have done. Somewhere we have done. Where is that profit of NCI? Profit of NCI where we have done. Profit of NCI. What profit attributable to NCI? Is that profit attributable to NCI? How much is the profit to NCI? Profit of NCI is how much? 5,400. Is it right? Alhamdulillah. Fine. Profit NCI is a NCI profit. How much is there? Is it right? Working note 6. Is it right? Minus. Is it right? Minus 5,400. 5,400. How much is the 0, 0, 0, 12, 7, 5, 157. Is it right? This is profit of parent company. What we have done, just I will repeat 1 second. Okay, I will make sure that is done. Okay, this is the group structure. Okay, group structure. Then we have taken the NCI. Okay, fair value of NCI minus plus fair value of NCI plus share of post acquisition profits. Okay, share of post acquisition profits. Fine. Mhm. 1, 2, 3, 4. 1, 2, 3, 4, 5. Then for where you got this one? 1, 2, 3, 4, 5. Profit on disposal. Where is profit on disposal? Profit 1, 2, 3, 4, 3, 4, 3, 4. NCI at this. Just I'm checking the sequence, okay? Just I'm checking the sequence. 0, 1, 1. If fair value of acquisition, why we have done this? That's what I'm saying. See? Oh, sorry. Sorry, we got confusion. Is it right? Exactly. Nothing is there. This is different, okay? This is entirely different. Okay, this is entirely different. Is it right? Yes. Now it's clear. Is it right? That is entirely. That is related to previous one. Okay. This is the working note 1. That is the group structure. Fine. The second one is net assets. We have taken the equity and liabilities approach method. Equity, retained earnings, current year profits, and dividends. We got in fair value of NCI at the time of disposal. Then we have calculated depreciation, the purchase consideration, fair value of NCI, minus fair value of NCI assets. When we take NCI, it is only the value of NCI. Here we are talking about the assets of NCI. Okay, we get the goodwill. Then what happens? We will calculate NCI is nothing but fair value of NCI plus post-acquisition profits. Is it right? Post-acquisition profits is the pre-acquisition. Post-acquisition profits is nothing but the value at the acquisition date and value at the reporting date. Is it right? Value of the acquisition date and value of the reporting date. Whatever the difference is there, that is the post-acquisition profits. 28,000. On that we have taken 30%. Okay. Next, that is point number 4. Point number 5, profit on disposal. Profit on disposal. They have disposed for 138,000. Is right? Net assets at disposal 138. Goodwill is how much? Sale proceeds is 200,000. Okay. Carrying amount. Carrying amount is nothing but what is the assets value at disposal, goodwill, and what is we have to remove the NCI. Okay. We get the value of carrying amount at the disposal, A minus B, we get the profit on disposal. Is it right? Then we have that pre-acquisition profits and after disposal we should not take. Before disposal we have to take, because the disposal happened on 1st of July. We have to take the 6 months profit only. Next 6 months profits we are not going to. That belongs to the parent company. We are not concerned about that. 18,000. 18,000 into 30%, 5,400. Okay, 5,400. Subsequently, we will, because it is a six months mid-year disposal, we have all the time what we are doing. We are taking it for how much? We are taking it for 6/12 only. Is it? We are taking the things for what? We are taking it for 6/12 only. We'll get the profit for the year minus whatever the profits of the NCI, we will deduct. The remaining profits belongs to the parent company. Again, once the moment you start revising, then it may, any doubt is there, you just ask me. Is it right? Any doubt is there, we can put the things clear. Okay. Now, what they are saying, next one. Using the information in the 3, prepare the Kathmandu's group statement of profit and loss for the year 31st December, assuming that the disposal of an subsidiary represents discontinued operations. Is it discontinued operations? Discontinued operations. Fine, no problem. Is it right? Is it right? No. Okay, now nothing is. Now, little bit information we'll take from the above. Okay, little bit information we will take it from the above. Okay, we'll put a solution like this. Is it right? We put a solution like this. Fine. Now they have discontinued the operations. Is it right? They have discontinued the operation. When they have discontinued the operations, definitely what will happen? You have the profits for the next 12 months. Profit for the period till the disposal, profits will be there. How much profits are there till the disposal? 36,000 into 6/12. Okay. Next, you have sold it. When you discontinue it, we will get profit on disposal. Is it right? We got profit on disposal how much? 80,400. Okay. We got profit on disposal of how much? 80,400. Is that very easy? Is that just you have to first understand. Again, I will explain you how it is. You have disposed it of the subsidiary. Till the disposal, profits is there. 36,000 into 6/12, 18,000. 18,000, 70% and 30%. Is it right? 70% and 30. Now you have sold that subsidiary. How much you have sold that subsidiary? You have sold the subsidiary and you got some profit. Is it right? Some 80,400 you got. Is it 80,400? Working note number 5. Is it right? Working 5. How much you got it? 80,400. We take 80,400 as that. Okay, that's all. Other things will remain same. Is that once you have sold it, definitely we will not take anything of subsidiary. We will take only related to what? Parent company. Okay, we related to parent. It's very simple. Don't worry about that. Is it right? Is it now? Is it you have to write? Is it right? What you have to write? Working note 1. Okay, working note 1. And understanding takes time. Okay, understanding takes time. That's all. Is that working? What we have to write? Profit for the period. For profit for the period from discontinued operations. Is that from discontinued operations? Is it particulars? Is it discontinued operations? Discontinued operations and NCI at the rate of how much? 30%. Okay, NCI at the rate of how much? 30%. Fine. It will come here. Is it right? Next. Profit for the period. Is it right? Profit for the period. Is it till what? 1/7/2009. Is it right? 1/7/2009. How much? 36,000 into 6/12. How much? 18,000. Is it right? What is the NCI share? NCI share is 40%. Okay. Next. Profit on disposal. Is it right? Profit from discontinued operations. Is it right? Profit from disposal. Is it right? Working 6. Is it right? Working 5. Is it right? Working 5. Is it right? How much? It is 80,400. That's all. Nothing is there. Is it right? Nothing is there. 0,048,98,400, and this is how much? 5,400. Is it right? Next. Is it? This is you can put it as a step 1. Is it right? You can put it as step 1. Step 2 is normal. Is it right? Step 2 is what? The step 2 is consolidated. Is it right? Consolidated profit and loss account. Fine. Only we will take what? We only will take the parent company. Only will take the parent company. Okay. We are talking about only Kathmandu. Only Kathmandu. Okay. Only Kathmandu. That's all. Is that continuing operations? Is it right? We have to mention continuing operations. Is it right? Continuing operations. Is it? Continuing operations. Fine. Revenue. How much is the revenue? Only we have to take. Is it right? Only we have to take. How much is the revenue? 553. Okay. Next. What is that? Operating cost. Operating cost is how much? 450. Only. Okay. Only we are taking the continuing operations. Okay, 103. Next, investment income. Investment income is how much? 8,000. Is it right? Minus subsidiary. Is it right? Minus subsidiary. How much is there? Same rule what we have done. Is it right? Minus subsidiary how much? 10,000 into 0.70. 7,000. Is it right? 7,000. How much we have to take? 1,000. Is it? How much we have to take? 1,000. It comes to how much? It comes to 104. Is it right? It comes to 104. This is called as profit before tax. Is it right? Less tax. Only parent company. Okay? Discontinuing operation. Profit tax is how much? 40,000. Is it right? It comes to how much? 64,000. Check the total. I'm just working on that. Okay? Is it? Next. Is it right? Next. Add. Is it right? Add. Profit from discontinued operations. Is it right? Profit from discontinued operations. Working note 1. Okay? Working note 1. How much? 98,400. Okay? 98,400. How much we'll get? 400 to 162. Is it right? 162. Fine. Now this is profit for the year. Is it right? This is profit for the year. Working note 3, profit for the year. How much? Profit for the year is how much? Profit for the year 162,400 minus NCI share of profit. Is it right? NCI share of profit. Working note 2. How much? 5,400. Is it right? 5,400. It comes to how much? It comes to how much? 157,000. This is the profit of parent. I thought of telling you that only. Okay.